Well, g'day there, everybody. Thanks for joining me on this Wednesday afternoon market recap. A rather incredible milestone unlocked and achieved today. Today was the 3,452nd day of the current rally, the current economic expansion, the bull market that we have found ourselves in since March 9th, 2009. This is the longest now economic expansion and subsequent bull market since 1957. That milestone has been unlocked, so I wanted to say a big congratulations to those who have participated in what has been a tremendously strong and also lengthy bull market. How much longer can this continue for? I don't have the answers to that at the moment. However, we are, of course, monitoring very closely the technical backdrop and what is most important at the moment, that being the retest of the gap all the way taking us all the way back to, I should say, January 2018. If we can hold this gap and then eventually continue above it, the bull market is going to continue. However, when and if we get all the way back up to 26,435, and if we start to at least see a strong reversal and the cracking of this intermediate trend line, well, this bull market may be, of course, on borrowed time. Time will tell which of those two possibilities and windows we are going to eventually transition through. For the time being, the market is strong. Now, what we saw today, however, on the micro backdrop is a little bit of bifurcation again in the US financial markets. We saw the Dow Jones Industrial Average pull on back down 80 points. We saw another negative print on the S&P 500, albeit very barely, down 1.12 points. This was after the shooting star candlestick that set up on Tuesday. You can see if I zoom in on the picture right here, this resistance box in our screen is being, of course, respected. You can see this upper wick that is rather pronounced during yesterday's session. Today, we more or less closed the gap with that spinning top. But the NASDAQ, it really bucked, I guess, the trend of the other two markets. It was up 29.93 points. And it does look as though we are starting to see, again, another type of continuation off from this intermediate trend line. What we want to see are these three markets in uniformity. And what that means is we have the NASDAQ back up, or at least very close to its all-time highs. We've got the S&P 500, as I've already alluded to, coming back on up and actually retesting this all-time high back in the month of January on a number of occasions. But what we really need to see is to see the Dow Jones close this gap and ultimately push above the swing high all the way back in January 18. We need to see these markets hold above those respective resistance areas, and then to see the successful retest of that resistance as new support. Now, obviously, that is, as I just alluded to, quite a while away. It depends how long it takes the Dow Jones Industrial Average to get all the way back on up here. But this is the critical point that you need to be monitoring. Now, also, what I wanted to show you was that of the Russell 2000. This is something that we've been keeping a very close eye on for a number of months now, really since breaking out of this ascending triangle, if I can zoom out and show you this. And then, of course, having the measured move back all the way on up to retest what was the bull market from 2003 through to the breakdown of that primary trend in the year 2007. This is, of course, the back test, if I can get this on a nice enough sort of screen for you, all the way back during this period when eventually the market did crack below that, which ushered in that of the GFC, and then the beginning of what is currently, again, the most lengthy bull market expansion, 3,452 days. But if you have a look on my chart of the Russell 2000, you can see with that pop that occurred really yesterday, we are very close to this 1,738 level. This is of significant interest to us here in Pivot Point Pro. You can see that we closed today at 1,722. So we only have really another 16 points or so to go until we definitively hit this target, which is going to be good. I'm not expecting an immediate reaction off from this target. It's more so a gauge, all right, that we've been sort of leaning towards over a number of months now. But even if I move this trigger over, okay, and just align it with what is that retest of that past primary bullish trend line, it can go up really as high as about 1,750 if you wanted to move that trigger up ever so slightly for the continuation to tag this target. So you have to give it a little bit of leeway up and around this area. This is a very long-term sort of projection off from the breakdown in 2007. And here we are, at least halfway into the second half of 2018. And this has become a very important level for the Russell 2000 moving forward. Pay attention to this market. Pay attention to this figure just here. I do think we are going to see something interesting develop up and around this location on the Russell 2000. Now, 2 days ago, on Monday afternoon, I spoke about Netflix being at its critical reversal area. We had that outside day engulfing candle. We spoke about the bullish trade set up to take us all the way back on up to roughly $400 per share. Now, have a look at Tuesday's candle. Have a look at Wednesday's candlestick. We have made already some pretty decent movements. We're already closing at 344.44. And this is looking very much so like 3 white soldier candlesticks, which is essentially a very strong reversal move. It makes a lot of sense off from the support pivot around 330. And this is largely very profitable with those call options, even over the past 2 sessions of trade. If you were lucky enough to actually jump in at 328, which was the trigger, as at Monday, it's even better for you. So I just wanted to update you on Netflix. There is going to be a little bit of volatility with this trade, but ultimately we're looking at the stock price. You can see my target 392. I think it's going to shake out and more or less hit that psychological round number, another $8 higher at that 400 handle on Netflix. The good news is that we still have, even from current levels, another $56 still to move until we need to, consider actually rolling out of that Netflix trade. So I'm pretty happy about that individual position. We've got a bunch at least of other stocks that are still bouncing off from their support areas. IBM is not one of those. I am going to make my way up the list, but you can see that we did have an engulfing candle 2 days ago, then a little follow through today. We are still, however, holding within all of this choppy range action. So I'm not really excited about IBM breaking out immediately. I do think, however, much like the market, we are going to see higher prices. And very similar to what I just called out on Netflix, we have the open window all the way up here at 155 on IBM that I do believe we are going to hit. You just need to allow this a little bit more additional time, really. If I bring up Google as well, you can see that we are stabilizing around this 1,200 handle, looking at this coming back up to 1,285 over the coming weeks. We haven't seen the type of reversal that we have already established and printed on Netflix, but I do think that is coming. If I keep oscillating through a bunch of these stocks, a couple of bounces as well on COP and CVX. We spoke about that tightening stops over the weekend because we are thinking about, of course, those stocks coming back up to their sort of respective resistance areas, but they don't have the type of momentum behind them, much like Caterpillar, for instance. Now, Caterpillar is of interest because we have most recently retested the primary bullish trend line. And again, very similar to Netflix, we are seeing a very strong reaction. You can see the entry here at about 137.59. I'm looking at Caterpillar coming up to close its window, again at 152. So we're printing at about 140 at the moment. You can see 139.63. That leaves us with just over $10 of movement till we actually close the gap. But again, we'll probably overshoot it and move somewhere up towards around 154, 155 as well. So pretty happy about this Caterpillar trade. If we see a little bit of market volatility come Thursday or come Friday, so be it. But overall, the markets themselves, they are very much so overbought. This does look like a type of an exhaustion type of move to the upside, but at the same time, that can be prolonged. And I just wanted to point that out to you as well. Baidu still bouncing off that 215 handle. If you got in at 222, more or less unchanged at the moment, but still looking at this coming up to 245 to close that open window. We've got Boeing Airlines again registering that off the bounce. There's the reversal candlestick that we were looking for around the handle of 355. I wouldn't be jumping into Boeing Airlines either direction at the moment. Yes, we understand we're at resistance, but the market itself hasn't printed any reversal signal, so to speak, and we're still looking at a bunch of these trades pushing to the upside. We have Amazon as well, an outside day engulfing candlestick, so it is holding up above that level, 1,900, and it makes sense that this is going to come on up and close or at least tag that 2,000 handle. So you can see my target up here, 1,990. This looks like some form of a bull flag continuation. If I bring up the exponential moving averages as well, you can see that we're actually bouncing off from that rising 10 EMA. So this makes a lot of sense, even though, again, a lot of people are going to point out that, yes, we are seeing at least sell signals on a bunch of these stocks and also the markets on larger fractals. That includes the weekly and also the monthly charts. You can't write off some of the nonsensical sort of behavior that you see towards the end of exhaustion types of moves. And it makes a lot of sense, just to reiterate, Amazon coming all the way back up to 1,990. And the leader of the stocks really last week, especially in tech, was Apple. Apple's slowing down. You can see the breakout at 210. Stop was placed at 212. We spoke about, taking profit if you chose to very early on in the week. You've had 3 opportunities to do so. As I look at Apple, it does look like another sort of bull flag continuation. And what's happening at the moment is on a very short term or on a very minor level of a fractal, on the daily time frame anyway, we're just setting up a resting pattern as we come back into play with the rising exponential moving averages. There's no, I should say it is in a very strong bullish trend. You cannot debate that. You cannot question that. You can see price action above all of the exponential moving averages. And you go through these resting patterns. They either generally show up in stair-step consolidation patterns, which are just sort of sideways rectangles, or they do set up in these pullbacks that happen, on decelerating or declining volume. And then you'll see the interaction and then the push by the outside day engulfing Morobosu candlestick, which will be a white candle. Very similar to what just printed on Amazon as well. So you can see the similarities between Amazon and Apple, a lesser extent at the moment to Google, but Google is going through somewhat of a similar process. We've closed the gap. We're down at the rising 50 EMA, and I'm expecting this to eventually break out above 1228 and take us up to 1285, ultimately even potentially a little bit higher as well. So that's going to be the market recap as at today. Again, just a big congratulations for just the length of this bull market. I think it's of the past 10 economic, or at least full economic cycles anyway. Of the 10th, this is now the longest registering, 3,452 days since 1957. So a big milestone hit today on the US markets, and something to behold. All right, everyone, that's going to finish us for this Wednesday recap. All the best. I will be back with you again in due course. Farewell.